Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The US dollar declined after China cut its key interest rates on June the 7th for the first time since 2008. Fed Chairman Bernanke refrained from signaling additional steps that the central bank could take to spur economic growth during congressional testimony. The US dollar was last trading at the level of 79.51 against the Japanese yen, a decrease of minus 0.14%. The euro rose against the dollar on speculation that Spain may receive aid, as the European Central Bank president said that policymakers were ready to take action after leaving the benchmark rate at a record low. European finance ministers were scheduled to hold a conference call to discuss a possible emergency assistance plan for Spain. Fitch Ratings cut the credit rating of Spain to the level of BBB on June the 7th. The euro was trading at the level of 124.72 last Friday, a decrease of minus 0.69%. The pound showed its first weekly increase against the US dollar in more than a month, and UK government bonds declined after the Bank of England kept its stimulus programme and benchmark interest rate unchanged. The sterling was last trading at the level of 154.23, a decrease of minus 0.66%. The Canadian dollar rose against the US dollar for the first time in 6 weeks after the central bank damped speculation about interest rate cuts, even as a jobs report indicated that employers added the fewest jobs in 3 months during May. The Canadian dollar was last trading at 103.18, an increase of 0.41%. Commodities now. Crude oil, Canada's biggest export, rose for the first time in 6 weeks on the possibility that discussions by European finance officials this weekend would result in a bailout for Spain. Crude oil rebounded as Spain was considered to become the fourth of the Eurozone's countries to seek emergency assistance. Oil was last trading at $82.20 a barrel, a decrease of minus 1.91%. Gold declined last Friday when the US central bank head gave no indication of an imminent stimulus, disappointing investors and decreasing the appeal of gold as a hedge against monetary easing. Gold was last trading at $1,586 an ounce, a decrease of minus 0.18%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.